Index funds or real estate? Which one's the smarter move in 2025? If you're thinking about investing this year, you've probably asked yourself this very question. Today, we're diving deep into both options with real-life examples to help you decide where your money should go. Whether you're 25 or 55, investing wisely is one of the most powerful tools for building wealth. But with market uncertainty, rising interest rates, and inflation in the air, the big question remains, what's the better investment in 2025? Index funds or real estate? Let's break it down. What are index funds and real estate investments? Let's start with a quick refresher. Index funds are collections of stocks or bonds that mimic the performance of a market index, like the S&P 500. When you invest in an index fund, you're basically buying a tiny piece of hundreds of companies at once. It's simple, diversified, and historically solid. Now, real estate investing means putting money into physical properties, homes, apartments, or commercial buildings to earn rental income or profits from appreciation. Pros of index funds in 2025. Let's talk benefits. Low cost. You don't need a big wallet to start. Even $100 can get you going. Diversification. Your risk is spread across multiple companies. Passive growth. Historically, the S&P 500 has delivered about 10% annual returns over time. Set it and forget it. Index funds are great for people who don't want to worry about managing tenants or fixing broken toilets. Pros of real estate in 2025. Now, real estate has its own powerful perks. Leverage. You can control a $300,000 property with just a 20% down payment. Cash flow. Monthly rental income can become a steady stream. Tax advantages. Depreciation, deductions, and 1031 exchanges can lower your tax bill. Tangible asset. It's something you can see and touch, which gives some investors peace of mind. Real-world examples for index funds. Let's say you invested $10,000 into an S&P 500 index fund in 2015. By 2025, assuming a modest average return of 8% per year, that investment would have nearly doubled without lifting a finger. No tenants, no repairs, just compound interest doing its thing. Real-world examples for real estate. Now, imagine you bought a $200,000 rental property in 2015 with 20% down. After 10 years, you might have built $50,000 in equity, collected $5,000 a year in rent. Your property appreciated to $300,000. That's a gain of over $100,000, plus you had someone else, your tenant, helping pay your mortgage. Key risks to consider in 2025. But both come with risks. Index funds. Subject to market downturns. If the economy dips, so does your portfolio. Real estate. High upfront costs, potential vacancies, and rising interest rates could eat into your profits in 2025. Also, real estate is less liquid. It could take months to sell a property. Meanwhile, index funds can be sold with a few clicks. So, where should you invest in 2025? It depends on your goals, time, and risk tolerance. If you prefer a hands-off, steady approach and lower entry cost, index funds might be the way to go. If you like tangible assets, have some cash for a down payment, and don't mind a little work, real estate could be your ticket. In fact, many smart investors do both, diversifying their portfolio across asset types to reduce risk and maximize returns. At the end of the day, the best investment is the one that matches your lifestyle and long-term goals. Whether it's index funds, real estate, or both, the key is to start now and stay consistent. Hit that like button if this helped you decide, And don't forget to subscribe for more investing tips made simple.